We are Lavoro, a leading agricultural inputs retailer in Latin America. We provide valuable services to farmers across the region, advising our clients on key decisions all year long. We work to empower small and medium-sized farmers so they can adopt breakthrough technology, innovation that transforms the land and nourishes our global population sustainably. The heart and soul of Lavoro is our world-class team of technical sales representatives, or agronomists. Our agronomists meet with well over 50,000 farmers every season in the fields and at our retail locations. We provide a wide portfolio of seeds, crop protection, fertilizers, biologics, and other specialty products to serve farmers' needs. Our agronomists are trusted advisors to farmers. At Lavoro, we operate at the forefront of agriculture and technology. Our vertically integrated specialty ag inputs business, Crop Care, is a rapidly growing supplier of biologics and specialty fertilizers in Brazil. At Crop Care, we use technology to help farmers nourish and protect crops from disease, pests, and weeds, with a growing selection of natural and sustainable products. We are a scaled, profitable, growing business with significant headroom for years to come. We are now taking the next step in our evolution by partnering with the Production Board. TPB was founded by Dave Friedberg, who pioneered the ag tech sector by founding the Climate Corporation. TPB builds and invests in exciting businesses at the very frontiers of science and technology. Together, we will work to bring the best solutions to farmers so they can farm with confidence.
Thank you so much for being here after such a long time. This is a very special day for Lavoro, as it's our first Investor and Analyst Day, and we're very happy that you took the time to be here, either here in New York or also virtually. My name is Daniel Fisberg. I'm a Managing Director at Patria Investments. I lead our investments in the agribusiness space, and I'm also a board member at Lavoro. So just before we dive into Lavoro and the partnership with the Production Board, just very quickly on Patria. We are a leading alternative asset manager in Latin America. We manage today north of $27 billion. And the firm was founded more than 30 years ago. We have offices around the world, more than 10 today, with 600 employees. And we do have a lot of experience in private equity, infrastructure, real estate, credit, and so on. Private equity today represents around a third of everything we do at Patria, and Lavoro is part of our Fund 5. We started this thesis, or this investment, back in 2016. And our first investment was in 2017. This has been really a very successful case, a remarkable case for us. And we are very happy with the journey that the company went through. It was a really incredible combination of strong organic and inorganic growth over the past 5 to 6 years. When we do look ahead, we still see a mosaic of opportunities for this company, either being more M&As, introducing new products, new technology, new services, entering new regions, new markets, etc., opening new stores. So very excited with what's ahead for Lavoro. And really to take the company to this next level, to this next stage. We are very excited with the partnership with the Production Board. You will hear a lot about it today. And we are also very excited about the opportunity to list Lavoro in the US to really fund all these opportunities that we are envisioning for Lavoro. Hope you find this day entertaining, interactive. We'll try our best. And to really kick off the day, I'll ask my colleague, the CEO and founder of the Production Board, Dave, to guide you through the rest of the day. Thank you so much.
All right, good afternoon. Thank you. Thank you all for joining us this afternoon. please read the legal disclaimers and risk factors at your convenience. So, I'm thrilled to be joined by the management team from Lavoro here today. I think you'll understand by the end of the session why we at the production board are so excited about the partnership with Lavoro and the significant investment that we're making in the business. We're going to cover over the next 2 hours, I think, a really great overview that provides a little bit more depth and clarity than we've shared previously on the business. I'm going to share some high-level points on what I think frame up a tremendous macro thesis for this business that extends beyond what I had shared in the previous presentation. And then Hui and the rest of the management team will walk through each of the elements that we believe will drive growth, success, and future potential opportunities for the business, as well as highlighting one of the partnerships that's been forged between Lavoro and one of the production board's portfolio businesses, Pattern Ag. And Rob Hranek from Pattern Ag will be sharing an overview of that product and a demo. And then we'll be doing a deeper dive on the financial model build and have an opportunity for Q&A. Following Q&A, we have a few breakout rooms, and so we can spend some more time together before the cocktail hour. So as mentioned, I'm going to highlight why I think this opportunity in Latin American agriculture is so unique at this moment in time. I've highlighted in our previous presentation this slide, and I think that most folks in this room are familiar with this broad set of theses, that there is a high level of instability in global food supply chains as a result of climate change and the lockdowns associated with COVID and supply chain disruptions that have arisen, and more recently the conflict in Ukraine. I think the WASDE report recently showed that we're in kind of 10-year lows in terms of stock ratios globally. Latin America has so much production potential. I think we've got a couple of the key ratios that we'll be walking through here in a moment. And given its geopolitical isolation, we think that the region really will be called upon to produce more calories in a more meaningful and sustainable way in the years and decades ahead. The small and medium farmer represents about 2/3 of the acreage in the region. And the way to drive behavioral change and increase productivity ultimately has to happen with boots on the ground, with the ag retailer, with the trusted advisor that helps inform each of those growers what to buy and how to use those products to improve their productivity and their sustainability. And that's why we are so excited about Lavoro. But just taking a step back once again, Latin American agriculture, we think, is at an inflection point in terms of growth. And our thesis is that there are 3 major drivers for this. The first is one that I'll highlight, which I think most folks who cover the market in this room are intimately familiar with, which is the emerging technologies that are really transforming agriculture and global productivity. The second is why there's a unique demographic profile with the Latin American farmer. And finally, is where we think there's an opportunity to have a much more integrated service offering in this region than we see elsewhere. So starting with the technology trends, I think it goes without saying, but we are seeing, call it a renaissance in technology, multiple types of technologies being applied to the agricultural markets that are really transforming our, as a species, ability to produce more with less. And we're seeing this come from 3 key pillars of technology: digital, genome engineering, and biologicals, each of which have the potential to improve yield per acre at a lower cost and do it in a more sustainable way. So I'm going to just take a moment on each one of them. We sold the Climate Corporation to Monsanto in 2013. And I think a large part of the success that we had in building that business to that point and in the years that followed was the ubiquity of cellular access in the Midwest, particularly in the Midwest of the US, that arose with the proliferation of 3G networks, beginning around 2006, 2007, 2008. And it was really around 2008 that we saw mobile internet adoption climb in rural areas in the US. And if you think about it, farmers are not knowledge workers. They did not grow up using desktop computers in an office. So their first access to the internet really happened when cell phone networks reached into those rural areas and they had their first cell phone. And so, there are a set of technology trends that are driven by Moore's law. The cost of technology declines by roughly 50% every 18 months. One of which is that we're seeing ubiquitous cellular access, so the ability to connect to the internet from nearly anywhere on the earth. The second is that the ability to sense the physical world has been transformed in the last 2 decades. The cost of little sensors that can be used to pick up everything from weather data to farm equipment data, to cell phone data, to scouting imagery, the cost of those sensors has declined so precipitously that they too are basically ubiquitous. And then the cost of transmitting the data from those sensors, processing that data, and building predictive models using all of that data has declined with Moore's law. And as a result, we see tremendous ability for software to make highly predictive agronomic recommendations to growers. And this is really going to transform every crop input market. What seed to buy, what fertilizers to use, how much to use, when to apply them. And there's a spectrum and a continuum that we've been seeing realized in the markets over the past decade and a half that we think is really just in its nascent stages in Latin America. And all of the technology stack exists to do this today. It's estimated that north of 80% of combines and planters in the United States have a planting monitor or a yield monitor in the cab. And that data is being utilized to drive these agronomic models and make personalized recommendations back to growers. Those recommendations can be delivered wirelessly. And almost all of the farm equipment, as many of you know, is already equipped to handle variable rate technology. So prescription maps delivered into the cab, driving the equipment, and ultimately delivering higher yield with less inputs. The second key technology pillar is in genomics. Plant breeding goes back to the dawn of agriculture. And historically, plant breeding was done using phenotyping, looking at a plant when you do a cross and choosing which plants to progress in your breeding cycle. As DNA sequencing costs declined faster than Moore's law over the past 20 years, what used to cost $100 million now costs $100. We've now had the ability over the last several years, or the last decade or so, to use molecular breeding or marker-assisted breeding. And so we're seeing a revolution in seed technology, where instead of measuring the phenotype, we're measuring the genotype to advance breeding programs. And more recently, in the last 10 years, with the advent of CRISPR and other precision gene editing technologies, we're seeing very specific edits being made that can actually do a much more engineered advancement of breeding in a non-transgenic way. And so I think this is a very important trend, because the potential of seed and the yield potential of seed is accelerating. And so when yield potential accelerates, we see, obviously, farmers spend more per acre and adopt that technology in an accelerated way. And the third key technology category is biologics. Because of that low cost of DNA sequencing, as we mentioned prior, we've seen an ability to understand what's going on in the soil, in the microbial world, that was never possible or visible to us before. And Rob from Pattern Ag will share more on this in a moment. But it has really allowed us to take the concept of biologics, which is the idea of using microbes or the proteins produced by microbes, as an alternative to traditional synthetic crop chemistry, and make it a reality. Because historically, the products were selected ad hoc, randomly, field trials would fail, and there would be a long development cycle with not a lot of success. Today, we're able to see much more success coming out of biologics programs. And as a result, the efficacy of these products and the ROI for farmers is quite significant across many categories. And we're seeing that in terms of the growth of the biologics market, particularly in Brazil, which will be highlighted here in a moment. So these three key technology trends are underscoring the opportunity for improved ag productivity and improved sustainability in agriculture for the years and decades ahead. And we think that Latin American farmers, and particularly Brazilian farmers, which I'm going to highlight details on in a moment here, are uniquely poised to adopt these technologies and benefit from them. And as a result, we believe this will translate into more dollars spent, and the benefit will ultimately accrue to a business like Lavoro. So a couple of key statistics that we think are highly relevant when looking at this market. In the United States, it's estimated that roughly 39% of acres are rented. And when you get into corn and soybeans in the Midwest, this number is actually higher. In Brazil, the rented acres is just under 9%. And the operating margin, according to the USDA, for the average US farmer is 4.3%. I believe for corn and beans, it's between 6 and 8% on average. And you compare that to the report from Rabobank of 46% average operating margin for a Brazilian farmer. It really speaks to the reason that we've seen such a tremendous growth curve in the region, as Brazilian farmers have more profitable dollars to reinvest in new technology to expand their operation and improve their production cycle. And there's more room to grow and to accelerate that growth. And that's because we might argue the Brazilian farmer is underlevered and underprotected. The crop insurance market in Brazil only represents about 21% of the growers compared to 74% in the United States. So as the crop insurance market grows and matures, we would expect, like we have seen around the world, the adoption of a safety net mechanism will increase the spend per acre of the farmer as they're willing to take on more risk and make a bigger investment. And similarly in the credit to production ratio. So this ratio is the total credit outstanding divided by the total agricultural production value in that market. So the credit to production ratio in the United States is 1.15x compared to 0.34x in Brazil. So again, as the credit markets mature in Brazil, we would expect those farmers to have more capital to continue to invest in their ag inputs and to drive greater productivity out of their farms. And demographically, we think that Brazilian farmers are also more likely to adopt new technology or to accelerate technology adoption. So the average age of a Brazilian farmer is 40 years old compared to 57.5 years old in the United States. Very internet native and very digitally native, much more so than perhaps the US farmer. They're already adopting genetically modified seed technology at the same rate as the US, which is near ubiquity. And there's opportunity that we think will arise in accelerated growth just to get to parity with the US market. Biopesticides, which you'll hear a little bit more about today in terms of the portfolio of solutions that Lavoro's crop care division offers, is only a 3% adoption rate in Brazil compared to 12% in the United States as a percent of the total crop protection market. And variable rate technology, we talked a little bit about the tools that digital enables and the equipment that has now become standard with variable rate technology. It's still only utilized at an under 10% rate in Brazil compared to 70% in the US. And when we sold Climate Corp to Monsanto in 2013, I think this number in the US was closer to what we see in Brazil today. So we really do expect this inflection point to kind of kick in the next couple of years. And finally is soil testing. We talk a little bit about those digital tools. Those digital tools and the decisions that farmers are making on what to buy, what products to use, and how to use them requires data. One of the key pieces of data required in agriculture is a measurement of the soil. What is the chemistry? How much nitrogen, phosphorus, potassium, and other micronutrients are in that soil? So nearly 98% of US farmers have done soil testing at least once in the prior 5 years. We don't know what that number is fully in Brazil. And there's a tremendous opportunity because we think once Brazilian farmers start to run soil testing, it becomes a great services business like we see in the US. And it also provides a mechanism for increasing productivity and increasing spend per acre. And I'll highlight one more point that I think presents an opportunity over the longer term. So those are all the digital, the technology and the demographic profile that I think is really going to drive adoption and acceleration of investment cycles by farmers in Brazil. But I think there's also another opportunity beyond that, and that is to offer integrated services. In the United States, the average farmer has roughly 5 or more trusted advisors, as they would call them. They go to their crop insurance agent to get their crop insurance. They go to their loan officer to get their credit, to get their loans. They go to their agronomist at their retail or co-op to get recommendations about what to buy and what products to use. They go to their equipment dealer to buy their equipment, and they go to a merchandiser or co-op or an elevator to sell their grain. Each of these different advisors arose in the United States because of the way that the market evolved, starting in the 1930s with the federal government's role in providing debt and insurance to support the farming communities. We think that the Brazilian and the Latin American market may not evolve in the same way, and that it is more likely to evolve into a much more integrated service offering, where you could see many of those services being offered by one or a fewer number of unified service providers. That doesn't necessarily mean that an ag retailer necessarily needs to only offer agronomic advice, but may also offer things like financial services, credit, crop insurance, and so on. And you'll hear more about those opportunities from the Lavoro team as we go through the sessions here today. So, I think one way to kind of think about, how much upside there is across each of those categories is to look at these relative ratios. And so when we look at the total harvested acreage in Brazil versus the United States, it's roughly 86% of the acres. Ag production, however, is only 44% of US ag production. And remember, this is a region that potentially has generally 2 seasons and sometimes more per year. So theoretically, we should see a ratio that's greater than parity between these two countries. The crop input market is only 54%. The ag equipment market's only 43%. And again, I think that the bottom two really highlight a tremendous financial services opportunity in the region, which is the credit and crop insurance markets at 15 and 14%, respectively speaking. So again, I want to bring this up because these markets should mature. They should ultimately reach parity, and in some cases, we believe, exceed that of the US market. And we think that there's an opportunity to be a singular service provider to help accelerate this change. And we think that the market is already realizing this outcome. So you'll hear more from the Lavoro team today. I'll restate a slide that we shared in our original investor deck and explain why we're so excited about Lavoro. The macro it obviously speaks for itself. We believe in this thesis. We believe in the opportunity for Brazil and Latin American agriculture. Lavoro is the #1 ag input retailer in Brazil, servicing over 50,000 farmers with nearly 900 RTVs across nearly 200 stores. They're the market leader, but only have 10% market share. So tremendous opportunity for further consolidation. And you'll hear from the team today why they are, in our opinion, the best in terms of identifying targets, executing against those opportunities, integrating them, and driving value. And so this is a business that is, and then you'll hear more about the crop care business, which, as we mentioned before, we think represents the next evolution in crop inputs. So this is a business that's a market leader in a growing market, a market that we believe is at an inflection point. It's rapidly growing. It's profitable, and we're paying, we think, a very reasonable multiple as part of this transaction to become shareholders in the company. And we'll review the comparables on the transaction multiple towards the end. So I'm really excited for you to hear more from the management team and really appreciate everyone taking the time. I know it's not often that you're asked to come and do an in-person Investor Day or Analyst Day. We've all kind of moved to Zoom. So we're really appreciative of your time, and thank you guys for being here. Hui.
Thanks, Dave, and welcome everybody. Thanks for being here today. I'm Rui Cunha, CEO of Lavoro. I think I've met some of you guys, but for those who I haven't met, I've been working in Lavoro since 2018. So at that time, Lavoro was a small retailer with a big vision. Prior to Lavoro, I worked for Echo, an ag machinery global company. So I've been really dedicated to farming in Latam for the last 12 years. And over that decade, I could see the amazing growth in production and growing importance of Latin America in the global ag scenario. As Dave was mentioning, we strongly believe in the potential of this region, not only because of what already happened, but what we see as that can happen in the near future. Brazil is a leading force in the agriculture of Latam. So I would like to start talking about Brazil. So if you just take a look on the production of some of the main commodities in Brazil, so we're talking soy and corn, you see that over the last decade, Brazil has experienced a significant growth in the production. So we see over the last decade, something around 70% growth in the production of soy and corn. You also see a higher penetration of corn as the second season becomes more prevalent. So farmers are producing more. Brazil is already represents 9% of global production of corn and 35% of global production of soybean. We see that happening because of higher investments, as Dave mentioned, higher investments that farmers are making in their property. As they make higher investments, they become more productive. So, and they're investing in technology. Just as an example, technology in seeds. So better seeds have enabled us to produce 2, sometimes 3 crops per year. With that, farmers are getting more income per acre in their land. With more income per land, they're also investing more in their property, in more technology, and this creates a positive momentum. Brazil also has an amazing capacity to expand area. So if you just take the current pasture land and we expand the agricultural land, we have an opportunity of almost 116 million acres of potential expansion of farmland just by entering in pasture land. This is equivalent to the harvest area in Argentina today. So it's a pretty big opportunity that we see over the next years. Now, we expect that a significant part of this growth will come from a very specific segment, which is the mid and small-sized farmers. And why is that? For a few reasons. First, because this is a very relevant segment. They represent 65% of the agricultural land. We're talking about farmers that have between 250 and 25,000 acres. They are not only relevant, but they also have an important technology gap. So if you see the production and the gains in productivity over the last years, you see that the large farmer, they increase more production than the mid-size and small-size farmer. But this trend is actually changing now. As we mentioned, they are making more money and they're investing more. So they have a big technology gap to close, but now they have the right conditions to do so. They have higher income. The equipment in Brazil, the fleet of equipment in Brazil has been updated over the last years. And also the access to technology is becoming easier and cheaper as infrastructure improves. So again, a lot of the growth will come from this particular segment in the market. And retailers are the critical link in the value chain in this market. So if you take all the inputs that move from manufacturers to farmers, 41% of this flow comes through retailers. And retailers are basically dedicated to serve small and mid-sized farmers. So their importance in the value chain is obvious, and the retailer plays a very important role in the sense that the retailer is the trusted advisor to farmers. Differently from big farmers, small and mid-sized farmers, they have retailer as their trusted local advisor who helps them to take better agronomic decisions. So this relationship is based on trust and is based on the historical between retailers and farmers. Now the retail segment is passing through an interesting movement, and it's a wave of consolidation. But for us to understand this wave of consolidation, let's first understand how the retail came to be in Brazil in the first place. So retailers, the typical small mom and pop retailer was formed by former multinational employees. So we're talking about salespeople that came from Bayer, Syngenta, BASF, that they were incentivized by those companies to leave, open a channel to help them access a specific part of the market that was not being well served because the cost to serve was way too high. And then they became a channel that was almost exclusive to this brand. So I would become a Bayer channel or a BASF channel. So they have a limited portfolio and also limited size. So usually they had one store. Now, as they grew, they started to add new products to their portfolio. So they started to add fertilizers and then also seeds. And then they also started to open up new stores and putting together a small network of retailers. So this marks the second part of the transformation. We have an expansion in the portfolio, a small expansion in area, but the way to serve the client hasn't fundamentally changed. It's just doing the same thing in more stores. Now comes the third part. Now, farmers need to increase yield, and they are actually increasing yield, and they are investing more, and they demand better products, and they demand higher technology, and they want more from the retailers. And in order to offer better services, retailers need to have scale. And to have scale, retailers need to have capital. So this is why players like Lavoro, well-capitalized strategic investors, are gaining share, creating this new breed of retailers, a large-size independent retailer, which is now being the consolidation movement in this market. So if you see in 16, the top 10 companies in Brazil, they had 22% of the market, And now these top 10 retailers in Brazil, they have almost 40%. So the movement is already happening, even though we still see a lot of potential to continue doing this consolidation. Now, looking at the market, we see three main models of retailers. The first one is the traditional small mom-and-pop retailer. So those guys I already mentioned their main characteristics. I think one thing that is interesting to say is that according to ANDAV, which is the main retailer association in Brazil, 89% of their associates, retailers, are still owned by their original founder. So almost 90% of those companies are still owned by the original founder. And 3 out of 4 of each one of these, 3 out of 4 in this segment, they are open to M&A discussions. So they already understood that in order to prevail in this market, scale will be critical. Now we have a second type of retailer, which is the retail arms of ag input suppliers. Retail arms of ag input suppliers is more a recent phenomenon that a few manufacturers or a few suppliers have adopted this model. And in our understanding, it was basically to solve some specific regional access problems that they had. So they will have a problem with access in a specific part of the market, and then they will start opening their own retail stores. We do see this movement as having challenges to expand, though. First, because it's not the priority of those manufacturers. And second, because by definition, they are not independent. So it's almost like having a drugstore that only sells Pfizer products. So it limits the capacity of this model to expand. And then you have the third model, which is the scaled, fully independent retailers. Those guys have a more complete portfolio. They offer a broader set of services. They're starting to invest in technology. And they are, in our case at least, also accelerating the M&As. We believe that this model will be the prevalent model in the future, and Lavoro is the leading player in this segment. So let's understand a little bit more about this new model. So farming is a complex operation. Farmers put their net worth at stake every year. And they do so in a complex environment. So they have to take 70 to 80 critical decisions in every crop season. Those decisions affect their productivity, affect their income. And they count with the retailer as a trusted advisors to help them to take the better decisions. Now, not all retailers are well equipped to make these recommendations. So if you take a good part of the retail in Brazil, they have the experience, they have the sales team trained in that specific region, but that's it. They don't have too many additional tools. So this is what is changing in the new model, and I'm going to explain a little bit more how. So if you look what makes Lavoro's sales guys effective, the first thing is those guys are well-trained to do what they do, right? So the vast majority of them, they have an agronomy degree from a university. They came from the university. If they came from the university, they will stay training for 2 or 3 years before becoming a full-fledged RTV. We also have cases in which we hire sales guys from the market, or they come with an acquisition, but in any case, they will be passing through the Lavoro training program. We also provide better tools to those sales guys. And this includes CRM tools. This includes digital tools like our app, that we're going to talk a little bit more about this in a minute. So better training, better technology tools, and we're also helping them by using specialized sales teams for more specific categories, more technical categories, Rachel. So the more technical categories, and I'm talking about seeds and specialty fertilizers, for instance. So Lavoro has dedicated teams for those highly technical sales. So these guys, they go along with the RTV who has the relationship to make sure that the recommendation on those categories that make a higher impact in their productivity, those decisions are done properly. In addition, talking about the responsibilities, they usually serve 20 to 40 clients. They live in the region that they operate, so they know the region and they know the farmer. They establish this relationship. And they spend the majority of their time on the farm. So sales are done on the farm. Sales are not done on the stores. And finally, looking at the incentives alignment, they have fixed salary and then variable pay as well. Variable pay reflects their ability to meet their goals that are usually related to revenues, gross margins, and cash flow metrics. The variable compensation is approximately 1% of what they sell. So we strongly believe that we have a well-prepared team, well-equipped, well-organized, and with the right incentives. Now that we mentioned about sales, guys, let's talk about the stores. So really, Lavoro's retail stores, and I would say most of the retail stores, they serve as a warehousing, logistics, and administrative hub. So those stores, they are there to support, mainly to support the RTVs which are on the field, to help them fulfill the orders whenever needed. So the inventory sits on the stores, and whenever we need, we can do this fast delivery. CapEx for opening up a new store is not that big, so we're talking about $100,000 per store. And basically, we're talking this to invest in security, IT infrastructure, and a few remodelations. So it's really a CapEx-light model. And Lavoro has built a massive presence with almost 200 stores covering approximately 120 million acres in Latam. In this map, and I'll leave for a moment for you guys to see, Lavoro has a presence in Colombia, in Brazil. We also have an operation in Uruguay, and we have recently announced an entrant in Chile and Peru. So with that, Lavoro is actually quickly spreading its presence throughout Latin America. Now I'd like to summarize this part by talking about the business model that we believe is a winning business model. So we have created over the last 5 to 6 years a large-scale platform, and it's also a resilient platform. And it's resilient because we have all this geographic and client diversification. The scale also allows us to create better services, to leverage operational efficiency, and to continue investing in our M&A capabilities, which are unique in this market. It also allows us to invest in crop care, which is our vertical business. Crop care, by turn, also help us to grow sales by providing Lavoro exclusive products and also improving our margins, as crop care, as you'll see in a moment, has very accretive margins. With this additional money, we can also continue to invest in R&D. So we have a strong pipeline of products also for the next years. This will also allow us to invest in technology to improve the effectiveness of our sales team. And technology also helps us to collect data for the almost 53,000 clients that we have. And this data can be transformed into valuable information to provide new services for farmers. So in summary, the more we grow and we continue doing this operation, the higher is the strategic advantage that Lavoro has. Now, to talk more about each one of the components of Lavoro's flywheel, we're going to have a session to discuss each one of these components. And I'd like to start with the M&A component, And I'd like to call here our head of M&A, Luiz Spinardi, to talk about how Lavoro advances in the M&A area. Thank you.
Hello, everyone. I'm Luiz Spinardi. I'm the head of M&A, and I'm here to talk about our M&A opportunities. As we mentioned, we've seen a very intense consolidation process in the sector over the past 5 years. As you can see here, there were more than 60 transactions, and despite all of the consolidation and acquisition, we still believe there is plenty of room, since the top 10 players still have less than 40% of the market. And in this very competitive environment, we've been the most successful company with 24 acquisitions so far. And we have our unique strategy. We are focused on our proprietary deal flow. We are verticalizing our operations in high product margins, such as biologicals and specialty fertilizers. And last, we are the only player who is focusing in Latin America. And why we've been so successful in M&A, we have some capabilities that give us a strong advantage, and I'll talk about it. First, we have a dedicated team. We have 15 people working from 2 countries, Brazil and Colombia, fully dedicated to M&A. Probably this is the largest M&A team in agriculture in Latin America. Second, our proprietary deal flow. We don't rely on banks or financial advisors to build our pipeline. Over the past 5 years, we contact more than 200 companies. And it's important to mention that we build relationships with those companies. We not just contact them, because sometimes it's not the right time for us to acquire. Maybe the company is not ready. Maybe it's not a region that we want to be present. But when the moment is right, we are the first one that the company they call. We have a couple of examples, the company that we monitor for 2-3 years before we close. Third, our associative approach. We build a reputation as a friendly acquirer. That's because we have flexibility in the way we structure our acquisitions. We can buy either 100% of the company, or we can buy a majority stake and leave the sellers with a stake in the business. This flexibility gives us an edge for us, because the good companies, they also believe in the market, but they don't have the structure and the tools to grab these growth opportunities, and that's why they partner with us. The majority of our acquisitions, we kept the sellers with a stake in the business, and our interests were aligned. Fourth, the structure process. I'll come back later and talk more about our investment process. Fifth, the discipline execution. And here I want to highlight our discipline in terms of valuation. Since we can rely on our proprietary deal flow, we don't need to be part of the auctions. So we are very disciplined in valuation. And last, the integration expertise. We have a dedicated team, and I'll talk more about it later. And to give an example of the differentials of our M&A team, I bring here a case of one of our acquisitions. We show this as one acquisition, but in fact, we acquired 5 companies at the same time. This is the case of Desempar. We first contacted the company in 2017. It was a group of 5 companies that operate independently. It was considered a group because it had one common shareholder. He had a controlling stake in one of the company and a minority stake in the other 4. And he tried to build a mini Lavoro by merging all the companies. But he did not make, because the shareholder structure was very complex. There were 18 legal entities and more than 30 shareholders. In June 2020, we reached an agreement to buy all the 5 companies all together. It was not an easy due diligence, but since we have a large team, we were able to conduct the 5 due diligence at the same time. And in April 2021, we closed this deal. As soon as we closed this deal, we renegotiated with suppliers to match Lavoro's price and conditions, so we gain a few points in margin. In the end, we turned those 5 companies who operate independently in a big business unit in Paraná, and now they have around $200 million in revenue. In the case of Desempar and all our acquisitions, we follow this 5-step process. First one is screening, is where we first contact the company. We spend a lot of time in the ground, traveling, opening new doors. And once we engage with the company, we move what we call deal alert. When we get all the relevant information about the company, special financials, we spend a lot of time on financials. And once we complete our analysis, we discuss with the management team and the board to get an approval for a non-binding offer, which is the MOU, number 3. And once we reach an agreement with the company, we start our due diligence. We have a very comprehensive due diligence process covering all areas, financial, legal, environment, IT, grants, etc. And if there is no red flag in due diligence, we start to build our business plan. In this phase, we have all the functional areas of Lavoro involved in the process, so we can map all the synergies in the acquisition. And here, we have our final approval with the management team and board to go ahead with the acquisition. Currently, we have more than 80 active targets in our pipeline, out of which we have 7 MOUs. We have 4 companies in due diligence, and we have 3 companies that we are building the business plan. So if everything goes well, we should announce more acquisitions in the coming months. In the same way, we have a very structured investment process. We have very structured integration process, where we aim to capture synergies as soon as possible, but we want to take care not to cause any disruption in the company. So the first phase is takeover. It's our 9-day plan, where we focus taking control of the operation. So we put our team there. We sit on the cash. The second phase is growth and synergy. We start to execute our growth strategy, such as opening new stores. And at the same time, we start to collect synergies by centralizing procurement. And finally, the full business integration, where we can capture all the synergies. Since we have a lot of recent acquisitions, we think there is a lot of value to unlock once we can full integration all those businesses. And now I want to talk more about our M&A strategy, starting with Brazil. Our main goal first is to be present in all relevant states in Brazil. As Rui mentioned, we are covering 120 million acres. In all the states they represent 3/4 of the area in Brazil. So for the nearby future, we are targeting to expand in Rio Grande do Sul and Bahia, which is a new market for us. And once we are in the state, we try to strengthen our position by increasing our footprint. And I'll give you an example here with the acquisition of a company in Minas Gerais. Minas Gerais was the 7th largest state in Brazil in terms of area. And we entered there in 2021 with the acquisition of Produtiva in the northwest of the state. After the acquisition of Produtiva, which was the light blue pin here in the northwest of the country, we acquired AgroZap, which is the yellow blue pin here, which was based in a region called Triângulo Mineiro. This is a very strategic region for us because it represents 45% of the area of the state. After these acquisitions, we were the 2nd largest retailer in Minas. And lastly, the acquisition of Floema. Floema was also based in the same region, AgroZap, Triângulo Mineiro, but in a complementary footprint. As you can see by the balls here, which represent the sales of each company, Floema had a very strong position in the north of the region, while AgroZap was very strong in the south. So with the 3 acquisitions, we became the #1 retailer in Minas Gerais. This was our playbook for Minas, but we have the same playbook for each state. So we know what the regions we want to be, and we have it very clear in our strategy. Now, as I said, we want to be a Latin American player. Why? Because we see here as a $5 billion market opportunity. In the same way in Brazil, we want to be present in all relevant states. Here in Latam, we want to be present in all relevant countries. In Colombia, where we've been since 2017, We've already done 4 acquisitions, and we have a solid presence there, and we are the leading company. And now we want to do the same with Chile, Peru. As we mentioned, we just announced acquisition of NS Agro that allow us to enter in those countries, which is very interesting because they represent about 2 billion market. And in the same way we did in Colombia and Brazil, we want to do in Chile and Peru by expanding our footprint with new acquisitions in complementary regions. Besides Chile and Peru, Paraguay is also in our top priorities. It's a very interesting country, a 2 billion market. And it's interesting because it has a lot of similarities to Brazil. The main crop is soybean and corn. And it has a lot of similarities with the states close to Paraguay, such as Paraná and Mato Grosso do Sul. That's why we want to enter in the next few months. And finally, I want to highlight our strategy for crop care, which is our private label that Mark is going to talk to you in a few minutes. In biologicals, we want to target companies with a good portfolio of products and R&D power, so we can add to agrobiological portfolio. And in special fertilizers, we are looking company with a portfolio of high-end fertilizers and adjuvants, so we can add to Union Agro portfolio. In both of these segments, our rationale is to cross-sell with our distribution business and expand our margin. And just to conclude here, I just want to say that we have a proven track record in M&A with 24 acquisitions. We have a very strong pipeline, and I do believe that we are well positioned to keep leading the M&A arena of this sector. And now I'll call Marcos to give you about crop care.
Okay, hello everyone. My name is Marcos. I'm the head of strategy for crop care. So first, what's crop care? This is Lavoro's private label. We sell not only, but mainly to Lavoro, and we operate in 3 main divisions. First, biologicals. So what are biologicals, right? These are microorganisms that apply on the seeds, or the soil, or even the plant, and it can be either biopesticides or biofertilizers. Biopesticides basically will attack the weed or the insect. Biofertilizer, you promote better soil health and increase the uptake of NPK. Specialty fertilizers, these are products that will supply nutrient deficiencies to the plant. And for example, we're talking about cobalt, we're talking about molybdenum. And for products, we have foliar and solar fertilizer. We're also talking about adjuvants. Agrochemicals, here we're talking about post-patent generic agrochemicals that we offer cost-competitive products to Lavoro. Fungicides, herbicides, and insecticides. Now let me talk a little bit deeper about our companies. So Agrobiologica, a biologicals company, we're talking here about high growth, high margin products. Then we have specialty fertilizers, Union Agro. Basically, this is a one-stop shop model for this product category. We sell cost-effective to premium, high growth, and also high margin products. I'm going to detail that for you. And also have post-patent agrochemicals with Perterra, partnering with the right suppliers in Asia and offering alternative complementary products to Lavoro. So in 22, our revenue was nearly $8 million, and we aim to reach almost $250 million in 24. Before I go into the details of our strategy and numbers, let me show this benchmark case, Nutrien. So Nutrien has this private label, Loveland, and Loveland operates in seeds, in fertilizers, pesticides. And then what's interesting about Loveland is that the results they're achieving, right? So you can see really high growth and high margin products. And basically, crop care has a similar strategy. Ultimately, what we're going to do is offer our high margin products to increase Lavoro's margin. And how are we going to do that? So in 22, we said we have a gross profit of 34 million, and we're going to achieve 111 million gross profit by 24. And we have 3 main growth pillars. Agrobiologica, investing heavily on new product development, innovation. We also have investing in operational capacity. Second, Union Agro, with a wider portfolio, with almost 100 products, and we keep putting more products in the pipeline, and also increasing the speed that we are selling to Lavoro. Third main pillar, per terra, with more relationships with key Asian suppliers to offer similar or better price for agrochemicals, generic agrochemicals to Lavoro. Now let me talk a bit deeper about biologicals. What are the main benefits that we have, right? So first, the insects, the weeds, the pests, they're getting more and more used to the traditional agrochemicals. And with that, they're creating a resistance. When you introduce biologicals, you introduce a new element. And just by doing that, you have a tendency to have better results. Second, biologicals, they create better soil health. We have more microorganisms inside the soil and the plant. You have a longer root in general, and with that, you accumulate more water inside that soil. The plant becomes healthier, and it's less subject to new diseases and pests, so higher productivity. And then sustainability. I could mention a couple of points here, but one is there is definitely a lower carbon emission with biologicals. So for instance, in Brazil, for soybean harvest, you have to spray biologicals twice during the entire harvest for soybean. While with agrochemicals, you have to spray 6-7 times. So you save the plastic packages, you also save on fuel with the sprayers. I can also mention safety aspects of biologicals. I think you all know that, but if you spray biologicals in a fruit, you can eat it without being harmless to human being. And then talking about the market. So the market today is $400 million in Brazil, but the growth rate is really significant. The last 2 years' growth rate was 44%. And why is that? We had the adoption of the row crops only recently, in the last 5 years. So soybean and corn, they're starting to use more heavily the biologicals. And with that, you see the penetration. And by penetration, David mentioned that. By penetration, I mean the total biological market divided by the total agrochemical market. You see only 3% in Brazil, while you have 12% in the US. That's why we are so optimistic about this market and this company. Now, the growth pillars for agrobiológica. First, let's maximize our sales through this great access that is Lavoro, 200 stores for us. Second, I told you before, now I'm going to emphasize, we have an intensive focus on new product development. We have a team of 14 people in R&D and marketing that intensively communicates with our sales representatives, getting insights from the farmers of what are the biopesticides that we can offer to cope with their problems. We also have a well-established new product development process. We know the market size and the market growth of each active ingredient in the biopesticide market. Once we understand that a product is attractive for us, we will analyze our technical capabilities inside our house. So lab capabilities, production capabilities. If we're not able to produce that product, we are going to try to partner with another company and do a B2B. And third, that is also very important. We're currently working with 100% capacity, so the demand was much higher than we expected. And we acquired a large site earlier this year. I'm going to talk about that, 121 acres. That's going to be very easy for us to upscale our production. So now let me zoom in this site that we just acquired, right? So first, it's really well centrally located in the countryside of São Paulo. So it's close to our Brazilian Midwest, Mato Grosso. It's also not far from the Northeast and close to the South, so really well located. Second, it's so large, 121 acres. So in the middle, we can have our production site over there, as you can see. Then the top right-hand corner is state-of-the-art R&D station. And then also in the middle up, we're going to have a lot of field tests for our biologicals. Once this factory is ready, that's going to be next year, it's going to be one of the largest biofactories in Latin America. Now let's talk about our specialty products, Union Agro. So why do we like this company so much? It's really a one-stop shop solution for the farmer. It offers soil products with lower prices, and also offers concentrated suspension, high margins, high price. We can even have the same product with different formats, solid, liquid, concentrated suspension. Each different format will have a different price and a different effectiveness in the plant, but the client, the farmer, can choose whatever he wants. Union Agro is in a market that is much larger than the biologics, so it's $2 billion market, but also with a very significant growth rate of 17% year-over-year growth rate. And then we have Perterra. So Perterra, our agrochemical, post-patent generic agrochemical company. And how do we operate? So basically, first, we carefully select our portfolio. We make sure that we're going to select suppliers in Asia and offer products to Lavoro where we can be competitive, where we can offer prices that are similar or better than what Lavoro already have. Second, we also act as a supply chain risk mitigation. So, for instance, last year we had the risk of shortage of glyphosate. I think you all know that, right? So Perterra was able to partner with the right suppliers in Asia and offer glyphosate, and our farmers would be not with a problem with this product. And lastly, our ultimate goal is to improve Lavoro's consolidated margin, right? I mean, Perterra's margin and Lavoro's margin. And we do that by capturing the tier 3 supplier margin. So we offer complementary products to Lavoro in the tier 3 supply segment. Okay, now I want to wrap up with some key messages for you. First, we are a highly differentiated company. We offer high margin products and high growth sales. And then we combine these very nice products with a great access to the market that is Lavoro, with 200 stores. So I have the perfect match. And with that, you can see the results on the left chart. In 21, the year that we acquired Agrobiológica and Union, we represented only 3% crop care sales of Lavoro sales, represented only 3% of all the specialty product sales. In the following year, it was already 18%. This is because the farmers are demanding our products, okay? In 21, we represented 4% of Lavoro's gross profit. And we definitely see a lot of room to grow, and that's why we think that we can quadruple our sales and achieve 17% of gross profit, total gross profit of Lavoro's number. Okay, so I know that most likely you'll have a lot of questions for me. I'll be happy to answer them in the break. Okay.
Okay, guys, we're going to do just a very short break, 5 or 10 minutes, and then we'll come back and do the last half of the presentation. Thank you.
My name is Gustavo. I'm the Chief Strategy Officer of Lavoro. And myself and Rob will be presenting this digital and services section to you. So for those of you who had the opportunity to see our prior presentation, this is just a recap of our growth equation. Don't worry, we'll get back to that on the financial overview section. But just to place what we're going to talk about, so the services and digital opportunity, we are very excited about it. We think TPB brings a lot of value and accelerates Lavoro in this path. But given its first stage, we are not accounting for it in our projections, right? So this is a potential upside to the plan. So let me start with where we advanced the most since our last presentation, which is in the soil testing space. So since the beginning of Lavoro, by being on the ground, boots on the ground, we understood that the soil analysis in Brazil was not anywhere near the US market is. So in the US, as they've said, almost everyone does it. In Brazil, there's not even a reliable statistic about what is the adoption rate. And when you talk to farmers, you see that some guys do it once every 2 years. Others do once every year. Some collect the soil samples themselves. Others rely on the retailer. Others rely on the labs. So the supply structure of the market is not there. We saw that as a channel, as a trusted advisor of the farmer, we could help them to fulfill this space, but there was no solution in the market until we met TPB and with them Pattern Ag. Over the past months, we had multiple sessions to discuss this partnership. And a few weeks ago, we announced that we signed a sales partner agreement with them, with which we will have exclusivity in the retail space until 2024. and we will pilot it with 50,000 samples in the field. This setup period is important to adjust the product, the technology, and test the best business model with farmers in Brazil. We expect to roll it out by August 23, and our plan is to pilot it with most technified farmers. And we see it as a good fit with crop care clients, mainly the biological clients. So I'm not an expert in this space, so I'm gonna invite Rob, our black belt, to talk more about the product and the technology.
Thank you, Gustavo. So I'm Rob Rannick. I'm the CEO of Pattern Ag. And I'm really excited to be here today to talk to you about our partnership with Lavoro. I'm first going to just take a quick step back and talk a little bit about what we do at Pattern. We really sit at the intersection of two of the trends that Dave talked about earlier, specifically digital agriculture and computational biology. And what we've done fundamentally is that we build a predictive ag platform on top of a unique biologically based soil analysis. And so I'm going to just step back for a moment and talk a little bit about what that opportunity looks like from a fundamental scientific point of view. So today, the way that farmers understand the biology of their fields is typically through individual scouting sessions, where they essentially walk through their fields and try to look at the phenotypes of the plants in their fields to understand what's going on. But scientifically, underneath their boots as they walk through those fields, every pound of soil has hundreds of billions of organisms inside it. And that pound has maybe 50,000 unique species among those organisms. That biology is fundamentally what's driving the agronomic outcomes at the end of the year for that farmer. Those organisms are interacting with the seeds that they plant as they grow into their crops. Some of them are symbiotic, some of them are antagonistic. All of them are impacting their agronomic outcome. Traditionally, we have not had the tools scientifically to understand soil biology at scale. But thanks to the huge drop in DNA sequencing costs that Dave covered earlier, we can now apply genomics technology to take that 1 pound of soil and turn it into 10 million data points, specifically 10 million DNA reads that serve as biomarkers about what's going on agronomically in that field. So how do we do that fundamentally from a technology platform perspective? We run in-house a next-generation DNA sequencing laboratory. We've invested in, and in some cases, designed and built our own high-throughput robotic systems to go fundamentally sequence soil at scale. And that's enabled us to have the highest throughput metagenomic soil sequencing facility commercially available in the US today. One thing I just want to cover quickly is what makes genomics data so uniquely powerful. So in part, it's that there's so much of it. You know, traditional soil testing, which is traditionally looking at kind of chemical markers, you get maybe a dozen data points on a per acre basis. With genomics data, you get about 1 million data points per acre. In addition to that, traditional scouting, you're kind of looking at plants, sort of trying to categorize them in some sort of taxonomy. What we get from the genomic data is very detailed data about the exact species and even in some cases strains of organisms that are in that field. And then what it makes it really a game changer fundamentally in agriculture is the same thing that makes it a game changer in human health, which is that genotyping is fundamentally predictive in the sense that DNA is predictive of the potential of life. And so just as on the human health side, you see huge investments going into genomic-based testing to look ahead at diseases before they happen, we're applying that same technology in plant health fundamentally. And so what we have built is a unique predictive agronomy platform. For years, we've been able to understand the physical properties of soil and the chemical properties of soil. What's been missing is this complete picture of the physical, chemical, and biological properties of soil. And that's what we've built our platform on. We've started off with very basic risks in the US that farmers face, predictive risks around pests and disease, and have since expanded this season into biofertility and looking forward into soil health and a bunch of other areas. There's really no limit to what we can do with this technology today. So let's talk about the value proposition from a US farmer perspective, what we see. Typically in the US, farmers are spending about half of their per acre costs on agronomic inputs. And those agronomic inputs are not only a big part of their cost structure, they are determinative in what kind of yield outcome that farmer is going to have at the end of the season. So these are critical input decisions. Today, Rui mentioned this a little bit in one of his slides. A lot of that is driven by agronomic advice from a trusted advisor who typically is looking at what historically happened in that field and making some calls for the farmer fundamentally. Because we can actually predict ahead of time what's going to happen based on our genomic technology, what we found is that in every of the roughly 24 biological analytics categories that we measure for farmers, they're either underspending or overspending on inputs. To make that concrete, let me give you two quick examples. So in the US, farmers tend to underspend on soybean cyst nematodes in their soybean crops, because if you have a low level of that disease in your crop, it's very hard to see, but you lose, say, your top 5 bushels of yield per acre. And that is a $50 an acre top line revenue opportunity for soybean farmers today that's hugely distributed throughout the Midwest. On the other side of it, corn rootworm is an extremely nasty pest in corn crops. You definitely don't want to get it. But it only impacts about 20% of US corn crops today. Farmers, because they can't see it ahead of time, tend to dramatically overspend on it. What our test allows them to do is to pick up the corn rootworm eggs that have been put in their soil in the fall and predict what their pressure will be when those eggs hatch in the spring. And that's a very, very powerful bottom line increase opportunity for farmers in the US. So we've taken this product into the US and distributed it over the last 3 years. What we're really excited to do is bring this to Brazil with Lavoro and do what we've done in the US, which is supercharge the advice that the trusted agronomic advisors can go give farmers with data. And so just for a couple minutes, I'm going to walk you through what our product looks like so you can put your agronomist hats on and see what the experience is for the RTVs who are advising farmers. It starts with a digital map and a plan of what farmers are going to spend agronomically next season. So fundamentally, you digitize the field. Then you start to make decisions with the farmer leveraging this data. So farmers typically aren't super interested in seeing lots of new data. What they care about is a concrete recommendation that's going to increase their profitability. And that's what you see here is us helping a farmer select a seed that is optimal for their field based on our soil test that will optimize the yield for that field. Then you need to think about crop protection. How do you protect from the pathogens that are out here? You can see our little stoplight chart of pathogen risk here. This helps farmers come up with their crop chemistry plan for protecting against yield loss. And previously, they're really using intuition and history to guide those decisions as opposed to data. You can do the same thing with weed pressure. So just as you have issues with pests, you have issues with plants. And you can do the same thing to really dial in your fertility recommendations for farmers with this exact same technology. Last, but certainly not least, in a world of growing biologicals that Marcos talked about, this test is particularly critical to understand how to effectively place biological products in farmers' fields. So this is something that we've spent the last 4 years developing in the US and commercializing over the last 3. We've gotten huge traction here that we're really excited about, and we're delighted to be partnering with Lavoro to bring this technology to their RTVs. So with that, I'll turn it back over to Gustavo.
We are really excited to implement and roll out this solution, not only in Brazil, but Latin America as a whole. So let's move to another area in which we already made a lot of progress, which is our Minha Lavoro app. So what we're trying to solve here, we're trying to streamline the relationship of the farmer and the retailer. And by doing that, also to save very precious RTV time so they can focus on high-value activities. So just to give you an example, there are a lot of frictions on the day-to-day interactions of the client and a retailer. So for example, if there is an unforeseen rain, the farmer needs more fungicide. He needs to talk to the RTV. The RTV may not be available because he's traveling the deep ends of Brazil. Then the RTV needs to contact the store to segregate the product to be shipped immediately to the farmer. But this product may exceed the existing credit line the farmer has. So this whole process can take a few hours to be solved and creates headaches for everyone involved. By streamlining this process and having the app, we also create the possibility of developing our own marketplace with the traffic of our clients. And that opens up opportunities to add more products and services to our offering. Just some examples of the functionalities that this app already has. So it's fully integrated with our e-commerce platform. It has pre-approved credit limits, and also very interesting real-time grains pricing. So just anecdotally as well, like how does it work in Brazil for the farmer to sell its grains? Typically, the store has a whiteboard, and the price of the day is written there. But the price changes every minute, every hour. So with the app, he's able to get more rich data to take better decisions and come to our app. Another area that we're really excited about is the financial services space. So that ties back to what Dave said about how the US market evolved in a fragmented way, and the Brazilian market can evolve in a different path. So the financial services for rural producers in Brazil suffers from the huge distance that exists between the providers and the clients. There's a lack of data and a lot of information asymmetry and adverse selection involved. Since we are there, we know the clients, we're visiting them every week, we have access to better data, and we are able to channel these products and solutions effectively to them. So what we're focusing mostly as of now is on the opportunity for credit, crop insurance, which also suffers a lot from adverse selection. The farmer wants to insure only the part of the farm where the soil is poorer, has more sand, and the insurer is very afraid to underwrite the insurance to him. And also grain derivatives by leveraging all of our knowledge and our team doing barter. So taking a step back, we see Lavoro as uniquely positioned to develop these services and digital solutions. Because not only we have the public information that ag fintechs or banks have, but also we have our own proprietary database. As we merge these two together and we apply data analytics, we are able to further reiterate the flywheel that Rui described by providing better agronomic recommendation, like with Pattern, new products and services, and while also incurring in a lower financial risk than what currently exists in the market. So this is a new agenda we're working on. We're very excited with the opportunity, but once again, it's not included in our projections. Okay, so what is included in your projections? Let's talk about it in this section. So once again, this is my favorite slide, our equation of growth. So we say that we have 4 engines of growth, so the market expansion, growing our footprint either through M&As or organically, adding new customers in these regions, and with crop care. And one question that we heard from many of you guys during the meetings we had, so how do you translate that mathematically into your projections? And we brought the answer today. So our plan for 2024 is to grow CAGR, our top line, by around 50%. And this is driven by the expansion of the market. This is a huge component. So just to remind you, the market has been growing at 16% CAGR in the past years. Second, M&A. M&A accounts for around 40% of this CAGR, so give or take 20% per year. Our organic expansion with new stores and newer TVs, and crop care. Crop care, as Marco said, in terms of top-line contribution, is not that large, but in terms of gross profit and EBITDA is really accretive. So Luis Spinardi talked about M&A, Marcos talked about crop care. Let me just give you some color on our organic retail expansion. Over the past years, we have developed and honed this methodology about how to add more capacity to currently existing stores and where to place a new store. So we start with a very detailed market analysis, looking at the size, growth, risk, competitive environment, and once again, looking at public information and our proprietary information that our commercial team gathers. Based on that, we do our business plan of how many RTVs, which stores, when, what is the potential, the ramp-up curve. And then we go on by implementing it and implementing a PMO as well to make everything run smoothly. This is what we've been doing the past years, and we will continue to do so. Then moving from top line to profitability, so this is our projections for EBITDA margin for the coming years. We expect it to grow to 9.2% by 24 fiscal year, driven by 4 levers. The first one, and very important, the growth of crop care in our sales mix, reaching 17% of our gross profit as a whole. Second, by capturing procurement gains due to our scale and the rollout of the integration of the recently acquired companies. Third, by focusing even more on high gross margin categories, which are seeds and specialties. So as Rui said, we have dedicated teams to work with that, dedicated managers. And fourth, with operating leverage. So SG&A dilution, driven by the ramp-up of our commercial efficiency, given that many stores are new and many RTVs are still ramping up. Capturing the synergies from recently done M&As, and economies of scale of our headquarters and etc. Now, looking at the coming year, which we are currently into. So how are we bridging the last year EBITDA result of 89 to the 23 result of 211? So first, there is the organic contribution that I'm gonna give you a little bit more details in the next slide. On the inorganic part, there are 2 subcomponents. First, there are 25 million of M&As that are already were closed during this fiscal year and will be parts of our results. And there are 53 million of future M&As, of which 2 are actually closed already and announced. So Casa Trevo, which marks our entry in Rio Grande do Sul, the southernmost state of Brazil, and Provecampo in Colombia. And 2 that were announced, they are binding MOUs, but they are not yet closed. So we have NS Agro in Chile and Peru, and Solo Sul, a distributor in Paraná. And we have other 6 MOUs signed to fulfill the remaining part of that. So how do we have foresight of our organic result? It comes from the way that the seasonality of the business works. So on the upper part of the page, in blue, you can see our cumulated revenue profile, right? So the bulk of our revenues, they are recognized in the second and third quarter of the year, which is when you look to the bottom part of the page, is when the summer crop, usually soybean, is being developed and harvested. So that's when we are shipping most products and recognizing most of the revenues. However, the farmer that is planting this soybean, he has already planned this cycle many months before. So he already negotiated what he was going to buy, from whom and when, at which price, and placed his order, his sales order. So as of the end of September, typically, we already have 60 to 70% of our year's sales as bookings. With that, we have very good confidence about where we're going to land in terms of sales and margins. You can also see in this page that the revenue doesn't come together with the receivables, right? So in Brazil and in Latin America as a whole, typically the payment is made at the end of the harvest with the money the farmer gets by selling his production. Having said that, so how does the working capital of this business work? So typically, as a rule of thumb, our working capital is around 20% of net sales. And during the year, it hovers around this level, not necessarily following the seasonality of the harvest plantation. In terms of payment terms, around 80% of our sales are paid in credits, so at the end of the harvest year, and 20% in cash. This varies year from year depending on the willingness of farmers to pay in advance, how confident they are, how does their balance sheet looks like. And with that, we plan our purchases, our procurement. So this year, we're purchasing like 77% of what we buy on credit, the same on the harvest term as well, and 23% we pay in advance. What is interesting about this dynamics is that when we pay in advance to suppliers, we typically get a very hefty discount of 1.5 to 2% per month, mainly used to buy seeds and fertilizers. So this payment cycle and the procurement cycle and the inventory levels drive these working capital dynamics. So given that credit is such a pivotal part of our business, it is also a part of it that we invested a lot in the past years. So currently, we have a team of over 75 professionals working in this department of credit and collection. We work with partners that provide technology for the processes and evaluations of credit, but we developed our own algorithm to assess the rating, the credit rating of the farmers, based on, again, public and private information. We also have the collateral for the sales as the grain production of the farmers. So I'm selling to him the inputs with which he's growing the soybeans, and the soybeans are the collateral for me to be paid in the future. But having said that, okay, so how risky is that, right? So historically, our allowance for credit losses has been below 0.5% of net sales. So yeah, not a very large number. And one way to do the credit sales, and I think you heard about it, or it's a doubt that many of you guys have or may have had, is what is this barter thing, right? So bartering is a way to do credit sales that is very common in Brazil. So how does it work? Instead of negotiating the input treatment in Brazilian reais, I negotiate with the farmer in bags of soybean by translating the price in cash to bags based on the market commodity price of that day. And operationally, how does it work? I deliver the products to the farmer will deliver his grains to the trading, and the trading will pay Lavoro. This modality of sales exists because farmers see a benefit in it. When they do it, they are locking in part of their commodity risk. And the retailer likes it, and we like it, because first, we get the best collateral there is, which is their grain production. The supplier also likes it, because I can provide this right to him, reducing the credit risk of the chain. And when we do that, the supplier incentivizes me with commercial discounts, so I get better margins. And also, when you're negotiating grains, there's more flexibility for the RTV to negotiate cross-selling and upselling products to farmers, because you don't have the item-by-item negotiation. Also, it talks and it's related to the financial services opportunity that we discussed before, right? So if I have their currency, the grains, I can open a digital wallet, I can provide credit, etc. So having said that, what are our projections? So in terms of revenues, on the left part of the page, our plan is to achieve $3.575 billion in sales. On the bottom, you can see the split of the organic growth year on year, which is around 20 to 25% per year. The 23 figure, it's higher because there is a grain component in it due to the barter negotiations. So the fiscal 22 year was very weak for bartering, because the commodity was very volatile and farmers didn't want to negotiate in this modality. And in 23, it's coming back to normal levels. If you isolate this effect, our sales are really growing at around 25%, so very much in line with our historical performance. And when you add the M&A effect, you go to the 41, 68, and 29% per year. And on the right part of the page, you can see the pro forma adjusted EBITDA projections. So organically growing at a faster rate than the sales due to gross margin and SG&A expansion. And on the upper row, the growth accounting for M&As. So this is the plan that we built, and we are very confident in delivering in the next years. So having said that, I'll invite Dave once again for concluding remarks. Thanks.
So I think we've shared this in the past, the transaction details on the merger with the TPB Acquisition Corp SPAC vehicle. We have highlighted here some of the updated market comparables, and we've shared a few more than we did in the last presentation that we put together. But I think across whatever dimension, we look at the business and the multiple on the transaction. We feel very good about the entry price here and consider it to be a very attractive valuation. We've highlighted in particular, as we did in the last presentation, the implied multiple on Nutrien's ag retail business by subtracting out their fertilizer EBITDA and using the industry average for the fertilizer comparables, which are footnoted here, to get an implied current market multiple of 8.4 and 7.4 times compared to Lavoro's 7.1 and 4.3 times pro forma adjusted EBITDA. We've also seen some significant price movement in some of these Brazilian ag businesses, retail businesses that trade on the Bovespa. Again, lighter volume, but seeing market multiples start to look a lot more like some of the internationally traded ag retailers. And obviously, we've included a few comps for what we consider to be, a decent for the crop care business, and that's obviously a significant component and growing component of the overall business. So we thought it was prudent to include them here. So, in summary, I'll highlight once again our enthusiasm for the transaction, for the business. I hope some of the materials and the presentations today helped everyone here understand the business a little bit better and understand why we've developed a good degree of confidence in the thesis and in the management team and in the opportunity for the years ahead for the business. We're really excited to partner with Lavoro. I think that we can add a lot of value, as we've demonstrated in our partnership with Pattern Ag, which we consider to be just the beginning of a long road of work together. And we're going to be very active and hopefully supportive and helpful with management in building value here for years to come. We're going to do Q&A now, and so we'll bring some chairs up and open the floor for questions. Thank you guys so much for your patience.
So feel free to just fire off your questions. I'm actually able to start with a question that we got from the audience virtually. So let me just start right now. For biologicals R&D, how much will be performed in-house versus outsourced?
Yeah, I can take this one. Yeah. So biologicals R&D, basically what we're doing is most of our investments in new products are basically done in-house. Okay, I cannot disclose the figures, but the majority of our products were developed in-house. And this actually helped us with creating even a higher margin. And then we saw an opportunity for the products that don't have the technical capabilities to partner with other companies that currently represent the minority of our portfolio. And they are good to have even a better scale in terms of portfolio can offer Lavoro, and also cross-selling with other products. But it's definitely the majority for our portfolio to be developed in-house.
Along the same line, it's an interesting approach. Will there be at some point, as a major egg retailer, an interest in adopting and channeling competitive biologics, U.S.-based biologics through your grower community?
For sure. I mean, that's one of the topics of our discussion the past weeks that we have been discussing with TPB. We have been learning a lot about the American biologicals market, which is much more advanced in so many ways. For example, biofertilizers, right? So biofertilizers only start in Brazil, and I showed you guys the new biofertilizer we just launched, and now that the sales is booming for this product. So it's pretty unique for Brazil, this product. So there are a lot of things that we can definitely learn here and apply there.
I have two questions, one for Gustavo, one for Rob. Maybe starting with Rob. So I was wondering, this product that works so well in the US, this predictive model where you can try to anticipate what's going to happen. So does it work just to take it to Brazil and it works, or you need a number of years to develop this capacity to predict?
Yeah, great question. So our view, it takes about a year of R&D to go calibrate it to a new geography. Of course, Brazil doesn't have a perfect overlap in terms of the organisms that are impacting farms agronomically from the US. It's kind of like 70% overlap, if you want a very round number on that. What we do whenever we enter a new geography is first we go take a set of what we call groundbreaker samples. So you need to go generate a fair amount of data for our machine learning models to go get calibrated to new geography. And then we enter commercially. And so that's roughly the timeline as we see it.
So the expectation is that the product add value after 1 year and a half?
The product can add value right away, but the full value takes kind of more like a year to really start to kick in.
And that's why the date in the presentation was for August 23.
Gustavo, and one question for you. So when you model, when you do those predictions about the future, how much the model gets impacted by commodity prices, interest rates, for instance, or impacting the funding business?
Yeah, very, very interesting question. So in terms of commodity price.
Gustavo, will you repeat it for people at home that can't, because they don't have microphones?
Oh, okay.
Yeah, so it'd be good to repeat the question.
So the question was about, for our financial projections, how do we take into account the impact of commodity prices and interest rates in Brazil? So what really drives the growth of this business is the farmer profitability, right? The more money farmers make, the more willing they are to invest on their land to increase their yields. Commodity prices by themselves, so they can move together with input prices. And this is what the correlation is not perfect, but if you look at the barter exchange rate, what we call the exchange relation over time in Brazil, typically it hovers around 24 bags of soybean to buy the treatment. And this is a price that farmers think it's attractive. So having said that, the input price that mostly is more volatile in what we sell are fertilizers. But fertilizers only account for 22% of what we sell. And we have been maintaining this product mix relatively stable despite the recent boom in fertilizer prices. Regarding interest rates, first talking about our financial costs, right? So our business has a really low leverage, differently from competitors in the space. And with this transaction, we will be net cash, right? So doesn't really impact. And what we also see is that historically the discounts you get from suppliers, they haven't been related to the interest rate in Brazil. They work with a separate dynamics, so it doesn't really impact us.
But then, so you, from the day you close the price based on a barter with your client until the day they deliver the soybean, the risk of price evolution is yours, or you hedge?
So
You have to repeat the question.
So, yes. So when we do barter and we exchange the inputs for grains, how does the commodity price risk is handled, right? So how does it work? So when every day we have the commodity quotes in that region from many companies, and also based on international prices, freight, Brazilian premium, etc. At the delivery date, on the future date. So, and when we are buying the grains from the farmer because we're selling inputs, at the same time, I'm selling it to the trading company. So I don't incur commodity price risk. This has been a policy we implemented since the beginning of Lavoro because our intent is not to be a trading company that speculates on grain prices.
All right, can you hear me? Yeah. Okay, great. I was just to follow up on that question, on the credit part of the business, where the farmers have to pay you at the end of the season in cash, I presume, how high has the credit loss provisions gone in the past? I know it was not so bad last year, but during a bad crop in a particular year, what have you seen last 10, 15 years or so?
Yeah, so we do this analysis when we are, so to look at the long-term past, we need to look at the companies prior to Lavoro acquiring them, because Lavoro is a very new company. So when we do the M&A financial analysis, we run their financial bad debt, their historical bad debt, and our figures, audited also, right? Historically, the benchmark in the market is what, 1%, Luis? Something like that.
Around 1%.
Hi. So I wanted to ask about sort of the market opportunity as you see it, because one of the areas that you talked about being a difference between U.S. and, say, for example, Brazil, is the access to credit and sort of the maturity of the credit markets for farmers. you have what you can control in your own growth trajectory, but how do you sort of influence, or what should folks be looking for as an external factor to demonstrate that maturity of the market in such a way that they will then spend more with you?
I don't know if I got the question.
What should we be looking for externally that really helps to unlock the spending ability of your farm customers?
Okay. So from the top of my head, and maybe Rui and my colleagues can complement me here. So first, we see that in Brazil, the public credit that the government gives hasn't been growing at the same rate as the agribusiness in Brazil. Agribusiness in Brazil is booming, but Brazil has this fiscal situation that it doesn't allow for the government to provide that much credit. So you see this separation in the trajectory of the curves, right? Another thing that you could look at is the benchmark that they've brought, that the Brazilian farmer only has a 0.3 something of his production in credit versus more than 1 in the US. In addition, there is I don't know how to quantify this now, but there is a pent-up demand to renew machinery. They want to buy machinery with variable rates. They know that it's good, it will improve their yields, but they don't have the money, right? And what we see on the ground as well is that there is this very relatively large informal market of credit. So one farmer asks for money from his friends when there's a month or two in which his cash flow is not matching. And the guys charge 2-3%, a very high rate. And per month. And that happens because the banks can't assess they are not there with the capillarity, and it's very difficult for them to assess the credit risk of the farmer.
Anyone else want to add to that?
Go ahead.
You okay? Okay.
Hi, Kevin McCarthy with Vertical Research Partners. 2 questions. First one would be for Luis, maybe. Can you discuss the average multiples of EBITDA that you've paid in the past for ag retailers? And as the industry consolidates, has that multiple been generally stable, or have you started to observe some upward drift?
Okay. Yeah, I'll start with the questions. I think as I said, we were very disciplined in terms of valuation. Okay. So as I said, we see the price going up when we have some auctions, if maybe some large players in Brazil and the higher banks. That's the only case when you see the prices going up. So we stay out of this kind of auction process. So for us, we have kept our multiple low single digit in the acquisitions. So we kept this since the beginning. So we kept our policy. So that's why it's so important for us to build our own pipeline, so we don't rely on this process, and we can keep the acquisition multiple low.
My second question would be to do with the subject of density. So you've talked about expanding inorganically within Brazil, but also opportunities in Chile, Peru, Paraguay, and elsewhere. How important is it, or unimportant is it, to have density of your stores and your assets, and how do you weigh the pros and cons of being more aggressive within Brazil versus outside of Brazil?
Yeah, I started, and I think maybe.
I can help you.
Yeah. For us, it's not one or another. So we think there is an opportunity both in Brazil, like in each state, we see they really know where we want to be. We have, when we have the shadows where we want to be. But in Latin America, I think we see a lot of opportunities. So we are not, okay, or either I go to Latin America or I stay in Brazil. I think we can follow both of the strategies and become a larger Latin American players. So we have this team in Colombia that they have a lot of knowledge on the ground from Colombia, Peru, so they know where to be in those countries. And here in Brazil, we know we have all the companies that we invest. They know where we want to be, where the market is growing. So it's not a mutually exclusive strategy. So we can find, we really think we can follow both of the strategies in Brazil, not with our team and our capabilities.
Yeah, I think as Luis has mentioned.
Pass the mic.
He has one.
He's mic up.
Oh, sorry.
Yeah, can you guys hear me? Yes.
Yep.
As Luis has mentioned, I think the density is important. It's I think even more important. We enter in a market in which we believe we can be relevant. So we enter in a market in which we see either inorganic opportunities to open up new stores, inorganic opportunities to buy new companies or open up new stores. There are some synergies in the back office operations, yes. So this is part of why we are organizing clusters. So for instance, in Brazil, is a more mature market. We have 3 clusters. So we are buying companies and we have the administrative team shared in those companies. So there's, yes, some synergies there. But I would say the most important driver is our ability to serve that market and to expand.
Great. Question from the queue here. With small to mid-sized Brazilian farmers, will small to mid-sized Brazilian farmers have similar financial capacity and interest levels as U.S. farmers for Pattern Ag's very sophisticated analytics?
Yeah, I can maybe start with that, and then Lavoro folks can follow up. So if you look at the market segment that Lavoro targets in Brazil, it's almost exactly our key market segment in terms of farm size in the U.S. If you look at the penetration of soil testing in Brazil, obviously there's a ton of low-hanging fruit compared to the U.S. market. So really, as we work with Lavoro to access this new market from our perspective, we just think there's a huge amount of opportunity to do even just some of the basics around soil testing, in addition to some of the more advanced testing that we do.
And just to add up, like if you remember the statistics that Dave brought up, the Brazilian farmer is very profitable. So he has room in his P&L, and he has the balance sheet to invest further in his production.
You can just shout. It's okay.
Sure. So fast forward is 2024, and we're looking back. And let's say you haven't hit your business plan and your financial forecast. Why would that be? In other words, I'm asking you, what are the biggest risks to your plan and your forecast?
I think I can start with that. As mentioned, we were very thoughtful of our projections. Now, there are things that in agriculture we may not control as related to climate events or farming income. But we do not see any meaningful risk, and in particular regarding farming income, which is a key metric. We don't expect our projections to be, off. So we're comfortable with that. I don't know if you.
Can I ask a follow-up?
Yeah,
on that?
yeah.
Of the 2023 projections, I think 93 million of EBITDA is from M&A.
Right.
Of M&A that you have yet to announce. It's an MOU. We know that MOUs fall apart all the time, and they may take longer than you expect. But it's interesting to me that you didn't highlight that as one of the main risks. So maybe if you could just address. I mean, it sounds like you have a very high confidence level in the M&A.
Yeah. Do you want to talk about the M&As?
Yeah, I think first, as Gustavo said, we have 2 deals that we announced, and it's binding MOUs. But we have
6 that have.
Yeah, and to give an example, historically, in the beginning when we started the thesis, like our death rate was around 50%, but in the past year we can see it's around 20%. Because, as I mentioned in our process, we spend a lot of time to understand the financial figures of the company. So when we get in the due diligence, which was the part of most of the companies we don't have to drop the deal. So historically, we have a learning curve in the M&A. After looking more than 200 companies, we've done like more than 50 due diligence. So we learn. So we are pretty confident in the pipeline and the MOUs we have. We know there is some companies that is going to die in the due diligence. Someone we are going to not pursue the acquisition, but we still think we have a very strong pipeline, and we are always recycling this.
Just ask a follow-up. Would you expect to not pay more than single-digit multiples of EBITDA that you paid historically on these 6?
We've shared the numbers of the multiple historically.
Yeah, sure.
Yes.
We should keep our discipline in valuation.
And are there cost or revenue synergies in these pending or potential transactions?
So the multiple, the single-digit multiple doesn't account for synergies, but these deals do have synergies, right? Both in terms of revenue, because we're able to accelerate the growth rate of the companies we acquire, in COGS with our centralized procurement, and in the second and third year on SG&A.
I mean, we have talked publicly about the multiples, right?
Yeah, we have. So about what we used to pay is something between 5 times EBITDA prior synergies. So it's previous year without synergies, so more or less.
Can I just ask a question that we got online on the same topic? What have been the characteristics of historic acquisitions that failed to meet internal targets?
Tricky question, huh? No, but I think it's very important that we learned a lot through this process. Like we are a high growth company, and there were mistakes during the period, right? So one of them that marked me, and maybe Rui can comment and add another one. So one of our first acquisitions in Brazil, we put our pedal on the accelerator too soon, too fast. So we tried to double the number of stores of the company in 1 year, and the company was not structured yet. It was fragile in terms of management systems. We were starting. We didn't have the management system that we have nowadays. So with that, for a period, we kind of didn't have the full control of the company and the margins, etc. So with that, we learned to balance more the rate of growth, especially in the first years.
I think the integration process is really key. We've learned after more than 22 acquisitions. So as Gustavo mentioned, in the beginning, we made mistakes related to accelerating the growth probably way too soon, or taking costs out also way too soon. Those are companies that they are not sophisticated. Sometimes they don't have systems. And if you take out some of the structure before for instance, to take some cost and move to the shared services operation that we actually have. So if you do that too soon without preparing the company to do so, you're actually destroying value, or you can lose control. So what we have developed over the last years is a well-disciplined integration approach. So in the first year, we're really taking care of, taking control of the company, taking control of the cash flows, understanding what is going on, making sure we have the team in place. And then in the second and third year, we're going to work towards growth and then synergies. But it's a much more gradual process to minimize risks.
So 2 questions. So number one, just the competition around the M&A piece. And obviously you've talked about Nutrien as one of the players and kind of compare yourself to them.
Right.
They've been very active in Brazil, looking into it. So how would you describe the differences between your approach versus Nutrien's approach, and why do you think you can win when you go after targets if they may be approached by the two of you?
Yeah.
Can the online folks hear that? You guys told me they could, but no.
Okay, can you repeat? Let's use a mic, please. Can we get another one? Yeah. Or just repeat the question.
Yeah, so the question was basically about competitions on M&A and specifically the competition with Nutrien, which is a major player, well capitalized, and also doing acquisitions in the region. So what we have developed is what we believe is a unique capability to identify good targets, which are usually mid-sized companies with a lot of growth potential. Those are not always well structured, but we do have a clear roadmap on how to structure them after the acquisition. And we developed this technology of doing this fast and in a very disciplined way, using the multiples that I just mentioned. So we made, on average, 4 acquisitions per year, or sometimes more. So Nutrien has a different approach. They usually go towards more ready companies, usually larger companies that also goes for larger EBITDA multiples. And I think they have this different approach of looking for, I would say, more developed companies. And I would say this is not the vast majority of the targets that we have in the market. So by using our approach, I believe we can grow faster and we can accelerate M&A faster than Nutrien. This is what we have seen over the last years.
Okay. Just one more point. So Luis mentioned that we are more flexible in terms of the structure of the transaction as well, right? We buy majority, but we don't have to buy 100%. What we saw so far of Nutrien is they want to buy 100%. And the founder not necessarily wants to leave. He wants to get part of the upside. And so there is a segment of the market that is not addressed by Nutrien in our view.
Okay, and then the second question is just along the lines of that. If we take a look and following up on his question earlier on the future EBITDA contribution from M&A, it's kind of interesting to see if you just quickly do the math of what's been announced already and going to be incorporated has a higher margin profile than what you think you might be adding in 2024. Is there a rationale behind why you see like a slowdown in the margin contribution? Just the EBITDA margin looks smaller for what you might acquire in 2-3 years out versus what you just acquired this year.
I think it has to do, we can check better, but I think it has to do with the mix of crop care versus distribution targets. So distribution targets have single digits EBITDA margins. Crop care targets have 20 to 30% EBITDA margins.
Thank you. So a couple of questions. Firstly, if my math is right, probably you make around $600,000 in EBITDA per location. Is there kind of a target you have, or what you think is normalized, or a maximum amount in Latin America?
Yeah, so I think your math is right. Nowadays, our typical store, on average, if you just divide the revenues by the number of stores, we're selling around 35 million reais, so $7 million, give or take. But many of these stores are not yet mature. Like around 40% of our stores have been opened in the past 3 years. So they're going up in this productivity curve. There's still a long way to go. And with that, you'll get operational leverage in that cost and in that EBITDA.
Okay, thank you. And the second is, at least on the fertilizer business, which I think is like almost a quarter of your distribution revenues there, we've seen tremendous volatility. So what strategies are you employing to avoid essentially having your margin squeezed or even realize losses during this period? And if there are any examples of what happened over the past 6 months with what we saw in Brazil?
Yeah. So as you properly pointed out, fertilizers prices have been very volatile. So the way that we used to operate is that we try to minimize large buying positions without being covered by a selling position. So we try to match what we buy and what we sell. So in a market that, when you see a market with fertilizer prices more stable or even going up, you may feel more comfortable to take a large position of buying and then eventually selling. But what we're doing right now is we're trying to match buying and selling, right? So we avoid a lot of exposure, and we only buy a second batch when we ended up selling the first one. So by doing this different approach, we take smaller positions and then we reduce our volatility as well. Also remember, we are a markup business. So usually we put a margin on top of the prices that we are buying. So we also protect our margins in this sense.
Question from the online audience. Are there aspects within ag tech you believe are poorly suited for adoption in Brazil that may be taking market share elsewhere?
I can tell you what I don't believe in ag tech. I don't know. That's
So maybe just to kick it off, and the ag tech space in Brazil is very early stage. It's very rare to see a company doing a Series B. They are either seed or Series A. So the product market fit is not there yet. They're trying to develop their solutions. I think there is a very effervescent market there on credit solutions, like we mentioned, on automating the gathering of data in the farm. But the supply of companies and solutions is not mature yet. So that's why we're excited to, as Brazilians, like to take a look at the US and what is going on here, because you guys are a few years or decades ahead of us.
Biofertility is probably a good example to answer that question, right? So, I mean, there's pretty significant biofertility traction in the US with a number of startups that I know folks in this room know well. And they have not made their way to Brazil yet. And I think it was Tom that asked the question, right? Probably a very good case for a partnership model for these sorts of products with significant IP to partner. So we're seeing the efficacy, we're seeing the uptake, and obviously the growth curve on a few of these that we all know well is quite significant in the US right now.
Yeah, and to add to that, biofertility, for example, we don't have now a very detailed, widespread study about the reduce of the amount of NPK that you would have in the plants in soybean corn by using biofertilizers, right? I know that in the US this is pretty much well known, but in Brazil we don't have. So this is something that we're partnering with universities to have a serious paper, to prove to our customers and farmers that you can save on NPK by using biofertilizers, right? So this is something that we're investing.
But the pricing power is pretty significant. I mean, what, $30-40 an acre with like $60 return to end. So it could be off on that by a few dollars, but it's a pretty valuable product set with high margin.
Hi, just curious on the soil testing side of the business, and just curious as to, like, if you took, first of all, how spread apart are the samples that you're taking, and what is the genetic variability kind of within an hectare as far as percentage of the microbes that you're seeing, and how does that compare U.S. versus Brazil?
Yeah, so if you look at sampling densities, they vary, in some different ways, but roughly you're talking about one sampling core per acre, and that's typically a 6-inch, kind of 3/4 inch diameter core. So that's roughly the density. is 1 per acre in the U.S. And if you look at the field-to-field variability, that's both a spatial and a temporal variability question that gets very complex, when you're dealing with tens of thousands of species to really even try to come up with a simple number. But if you want a very kind of simple number across a broad geography in agricultural fields, which, to be clear, are highly engineered systems. At this point, fundamentally, it's not a natural ecosystem. It's engineered for agricultural productivity. You'll see kind of roughly 60% similarity across time and space, but that's a very high-level answer in terms of the biological content of that soil.
Great. And then if I could just follow up on when you think about converting pasture land, to planted crops. Is irrigation more of an opportunity? Is that a equipment sale opportunity for the business, or just how to think about that?
Maybe the future irrigation is it's not that well developed in Brazil, and in particular not well developed in retail channels. It's not on the short-term plan. Maybe in the future, but I think we do have other areas to explore before that. Yeah.
Okay, one more question over here, and then we're going to go to the breakout rooms after that. It's right in there, right there. Yep.
Thank you. I was just curious if there were any opportunities to bring crop care products outside of Latin America. I guess given the current adoption rates, the market potential is pretty big in that region, but I'm curious if you see any potential for those products to be competitive in other geographies.
Yeah. Since the acquisition, since this partnership with TPB, where, as I said, we're learning about US, we're learning about other countries, and we are also showing the details of our products and the benefits. So yes, of course, we have to understand the regulation of applying that biological in each specific country. Because, for example, we're already applying in a study to apply our products in Colombia. Why can't we just go to other countries, right? So yes, it's in our pipeline of studies to perhaps move further to Brazil and Latin America with our products.
Thank you so much. Thank you, everybody, for coming. Really appreciate it, both in person and the Zoom audience. This concludes the Zoom audience participation right now, and we have some casual breakout rooms as well, so we can continue the conversation in smaller groups. Very, very casual. All of these guys are going to be available, so please continue, and thank you very much.